Hi all, my name is Zoran Kresovic and I'm the head of sales at 8cap. Welcome to trading battle number 86. It is my first time, so please don't be too hard on myself. I have been thrown in the deep end by Diksha and Natalie. Hope it's going to be a great session tonight or this afternoon, or good morning, good afternoon, good evening, wherever you are around the globe. Tonight we have some special guests from South Africa. They're both from South Africa. One is residing currently in South Africa. The other one is residing in Cyprus. So let's welcome them in. Number one guest tonight is Francis Han. Francis, welcome.
Well, thank you for having me. Looking forward to it.
Absolutely, absolutely. And guest number two is James Bruce. James, welcome.
Thanks for having me as well. Appreciate it.
Fantastic. Excellent. How are we feeling, gents?
Good.
Oh, good.
Ready to go?
Yep.
Fantastic. I believe you have been on the show a number of times previously as well, so it's good to have you back. Obviously, you must be doing some great work. Fantastic. How about we start with you with some bios and, introducing yourself to the audience and people that haven't actually seen you before or haven't watched the show previously. So how about you, Francis? Can you tell us a little bit about yourself and what you do?
Yes, sure. So Francis Hunt, long-standing in the markets, a passion of a lifetime. My approach is volatility-based. We look for the squeezes in the volatility. I run a trader community, trade for my own account, and help with the education and guidance inside that community so that people can become more effective, chasing highly expensive rewards with really tight risk, with money management being integral to surviving in this game.
That's brilliant. That's excellent. I love the educational side of things, definitely. How long have you been doing the educational side of things for?
Started 2009, and just helping others and establishing the program, which we now have today, which continues to evolve, but is pretty well set.
Fantastic. There's nothing better than giving back to the community, right? Excellent.
It makes you a better trader personally as well. I always say one of my favorite things is teach what you seek to learn. And actually the community has helped me develop out the theory. The early guys with the early questions actually lay the railway track down for the later guys. Absolutely.
Fantastic. And from what I can see, you've been trading the markets for well over 30 years. Is that correct?
Well, yeah. So I was pretty young. I was about 18 when I first became, and I would classify that as more investment interest. And then I got badly burnt in the October crash of 1987. So that was my seminal introduction to markets, where we essentially got in a space of a week about a 37% haircut, and over the space of a number of months, well below half. After I put a small amount of money I inherited from an aunt, it just got the biggest old haircut ever. And that was an investment. I wouldn't have called myself a trader at that point, right. But that was my initial introduction. And that was the equities markets, the bull market of 1987 that crashed.
Yeah. All right. Keen to hear more. And definitely. Absolutely delighted to have you here. Number two guest tonight is James Bruce. James also comes from South Africa. James, do you want to introduce yourself and tell us a little bit about what you do and how you got involved in the markets?
Sure. So my name is James Bruce. I've been trading now for 5 years, 3 years full-time. I moved to Durban, South Africa from East London to play professional rugby for the Sharks here in Durban. And I was also studying a BCom financial management degree at the time. I injured my knee, and that's how I got lured into financial markets. Always had an interest for it. My dad's an accountant, so just always had an interest for it, and then finally just dove into it, and here I am 5 years later trading full time now for 3 years. So that's how I got into trading.
Yeah, brilliant achievement. I've been trading the markets for quite some time as well. And, to go full-time trading is not easy. I can tell you that much. It's one of those challenges where psychology changes and everything changes in general, because all you can rely on is actually, what you hunt is what you eat, as they would say, So definitely interesting stuff. So gents, obviously, the rules for tonight. I assume you do. If you don't, please do let me know. There is obviously 3 challenges. Challenge number 1 is basically your favorite indicator or favorite method. So basically trading based on that. Then obviously number 2 is actually spinning the wheel and trading the asset. And then challenge number 3 is actually placing a trade and holding on to that trade for the next 5 days. And we'll touch on that a little bit later on. So do I have any favorites who wants to go first with challenge number 1?
Yeah, I'll go first. The market is looking too hot right now for the London session. So I normally trade the London Open on currency pairs. So I normally focus on Forex currency pairs during the London Open session, which is at the moment 10 a.m. South African time. It's 8:05 in the morning right now. But I do like, so I use exponential moving averages and the TDI indicator. So this is on the 15-minute time frame, as you can see at the top. So the TDI indicator, so this yellow line here at the bottom, gives me my market sentiment along with the exponential moving averages, which you can all see. You've got the 800 here at the bottom, which is the purple, dark blue. Then I've got the white, which is the 200, and then the 50 EMA, which is the light blue. And they all show me that it's in an uptrend, along with the TDI indicator, the market sentiment on there, giving me a bullish bias, as well as the high time frames also look pretty bullish. So I'm going to place a long on the pound yen. I really like that to the upside.
Pound yen?
Yep.
Yeah. Highly traded pair, definitely. Yeah, and super volatile pair as well, actually. What I find, I don't know with you, but Great British Pound is actually one of those ones. If you love volatility, if you love spikes up and down, that's, high roller coaster rides, that's definitely the one to go with. So, yeah.
Yeah,
nice
agree.
Excellent. And in terms of your strategy, do you take into account only price action, or do you actually take into account like pattern or time and any other components, short-term bar analysis? What do you generally consider when you're actually trading? Obviously you've indicated that you actually use a lot of indicators, but is there anything else that you specifically look for, because you are generally trading super short time frames?
Yeah, so I like to use the 15-minute for my intraday buy. So I'm an intraday trader. I don't really hold trades overnight at all, really. Obviously, because of the spreads, and the spreads widen up at the rollover of the day. But I'm looking at the 15-minute time frame, as well as then I look for my entries on the 5-minute. And what I do like for my entries on the 5-minute is the 8 and 21 EMA cross. So the red and the yellow, the red is the 21 and the yellow is the 8. So I like the 5-minute time frame, and we are actually getting an 8 and 21 EMA cross on the 5-minute chart over here right now. So that's what I look for. I get my bias on the 15-minute chart, and I go down to the 5-minute and look for the 8 and 21 EMA cross, along with price action, with the candles coming off the exponential moving averages. So that's personally what I like to do. I like using the indicators as well as price action. I do prefer looking at price action first, and then just the indicators kind of just giving me a little bit of a guide if they're in alignment. So is price action in alignment with the indicators, and that gives me obviously a greater confidence with regards to that intraday trend.
Fantastic. Stacking the odds in your favor, as they say, right? Probability of an outcome. That's all. That's what it comes down to when it comes to trading. And do you generally, like, obviously before the show, me and you have actually discussed and had a chat about it. You mentioned that you like adding on existing positions, obviously on the pullbacks. Do you take profits? Do you set your stop losses? How do you go about the risk and money management when you actually trade?
Sure. So personally, in the last, so I've been trading full-time 3 years now. In the last year or so, just by doing the maths and looking at my statistics and everything like that, I'm normally going. I'm not the best at holding my trades. I normally go for 1.5 R, because I do have a high win rate. So obviously the win rate and risk reward ratio is correlated. So because I have a high win rate, I don't need to aim for 3, 4, 5 R. I'm normally going for a high win rate with the 1.5 to 1 risk reward ratio, and I'm getting in and out of my trades pretty, adding in, taking out pretty quickly. On an intraday basis.
Fantastic. Excellent. So it's very fast moving, scalping or intraday trading. Yeah, that's fantastic. Excellent. I love that stuff. Francis, how about yourself? So in terms of challenge number 1, obviously favorite indicator or method, do you want to talk us through? Obviously you've got wealth of experience and you've been doing this for quite some time, to share with the audience, and great learning curve for me, and I assume a lot of other people that are watching right now.
Yes. Thank you. And my approach is, as I mentioned, it's very technical. So it's chart driven. and it will be quite topical as well, because the category I'm looking in is the higher volatility. So in a battle like this, where the goal is to make the most for our charities, it's actually not that important who wins. Of course, we're competitive, but given what we're doing, and that the final, I suppose, mark will occur in 5 days' time, it's quite a short, for me, as someone who's quite a macro guy who likes to sit in long-standing setups where the market tends to continue to bleed in your favor. So you generally have most days, if you've done it correctly, of course, market moves in your favor. And also, if you're incorrect, which will absolutely happen, you don't sit in the trade for long. You're taken out quickly. So the construct that I'm engaged in here, and I'll just pull this chart up a little bit. So I've chosen the crypto markets to participate in because they are a higher beta. There's more happening. It's been quite event driven recently as well. As many of you, even if you're not in crypto, will probably know, there's been the second largest exchange called FTX that's essentially turned its toes up in all amounts of fraud. So it's actually a market in turmoil. It will feel like I'm trading with it fundamentally, but the setup is actually a technical one. So I'm always driven technically. I'm not driven by narrative, but the current situation is very much a very clear narrative is going. So I suppose the question many will ask that are narrative driven is all the damage in crypto done for the price action? And my overall conclusion is no. So rather than it being a bottom, which many people are tempted to say, because by definition, psychologically, people are bottom pickers. They love the idea of something going low on account of we'll buy it. When actual fact, in most instances, in my personal opinion, things continue. It's a bit Newtonian, what we used to call an iron ball. What do you call it? A marble will continue to roll unless equal and opposite force is applied to it. And more people should be focused on continuation. So this particular structure, which I'll just hyper illuminate as well so that everyone can understand the trade idea for its value, is actually, in my opinion, a continuation structure to the downside that is already begun and playing out. And as a result, we would continue to be shorters in this particular market. One of the best examples, which has a pattern within a pattern, so we are in essence pattern traders because we are technical. We don't trust indicators. We think that's mathematics that is lagging. We like early indicators. We love the squeeze. So typically our trade already in this instance, we're already in this trade from earlier. In fact, we took it here. I'll just show it, but I'm jumping on late. So please understand that we actually got engaged over there, and it has been slowly working already in our favor for a while. The other thing that's interesting on this is that it's in a much bigger setup, which I will show later. I don't want to just change the time frames just now, but it's a macro head and shoulders. We have a unique way that we do head and shoulders with logarithmic when we are talking about day time frames and larger. So I actually think this particular token, which is known as Solana, which was a venture capital token, brought to market and was given a lot of publicity, quite a lot of hype, is going to round trip rather dramatically, having become super strong and was one of the top 10 cryptos, often sitting at as high, I think, as number 5, 6, now tumbled to number 15. So even relative to crypto's failure, it is overperforming to the downside inside a category of underperformers. So this is further, again, trend on trend.
Absolutely.
So we've got the technical setup, we've got the relative strength setup showing that it's relatively underperforming. And actually, for those that like the narrative, it was very well pushed by FTX and had a close relationship with FTX. So it is suffering also the downdraft.
Absolutely. So what you're saying essentially is the human emotion is actually driven within the charts. As a technical trader, that's what we actually consider and we take into account. Patterns are part of that component as well. And then essentially we just trade the human emotion. We're trying to look for those squeezes and basically key support and resistance levels or reversal signals or patterns. And that's why I assume you said there is, on the broader scale, when we have a look at the bigger charts, essentially what you're saying, the head and shoulders pattern is happening on on the bigger time frame chart, but you're actually narrowing it down into daily or 4 hourly, based on your strategy. Fantastic, excellent. That's really good. It's actually great to see that you both of you actually sort of technical traders, but you're also using different style of trading. I think that's what, when it comes to trading and what I've learned over the years, I've done a lot of educational funds management, brokerage stuff. Being a trader myself, is there's really not right or wrong. Like, it's what you believe in at the end of the day, right? And as long as it's working for you and you're stacking the probability of an outcome in your favor and you're doing it well, then there's absolutely no reason to actually, discount that. So look, let's move. I am actually a little bit time conscious of actually of the show, because from my understanding in the past, it was around an hour. Now we're looking at around 35 minutes. So I don't want to get yelled at. So how about we actually spin into the challenge number 2, which is spinning the wheel and trading the assets. So producers, can you please do that? And we'll start off this time with Francis. There you go, DAX. Do you trade DAX, Francis?
I have done before. I'm just going to bring up the chart and make sure I collect that. Oop, it's 8 cap, DAX index. Yep, we go straight to the etc. extra chart. Let's go. So interesting. So in terms of my strategy, I am again, as I mentioned, inherently technical. So we start on a macro. So I do multiple time frame analysis. So if I were to place a trade on the DAX, I would look generally how's it been performing recently. Many will be aware that the German economy is being hit by very high energy prices. That's a fundamental story, not a technical story. So I will always prioritize the charts over the narrative, because often that might already be priced in. So people have to bear in mind, just because there's a dour and very dull news story, it may already be priced in. You also have to bear in mind that the euro, whilst it's recovered recently, has been inherently very weak against the dollar. The dollar has been super dominant on the macro. Again, the dollar had a strong pullback in the last 2 weeks. That's established. But inherently, it's been the Dixie, which is the dollar index, which is 52%, 56%, I think, euro, inherently has gone from about 87 to where it is today at about 107. So that doesn't sound like a lot, but that is a lot of dominance. So we shorted the euro USD. Why am I talking about the euro when we've pulled the DAX? Because global macro, it means that the big money can go anywhere in the world, and it tends to flow where it's treated best. So in my realm, a global macro hedge fund manager, if he's losing money on the euro, would rather sit in dollars earning a higher interest rate if it's just at an FX level.
Absolutely.
But if there's some really good German companies, which there still are, that have been really heavily battered with the rising energy cost, which will invariably squeeze profit short term, but may long term actually see them push up prices, and their product is so awesome and the euro has made it so cheap as an equity, you could have global equity investors in the States buying very good German companies. So actually, my assessment here on the DAX is that it's had a fair amount of volatility in the 2018 COVID period here, which is what we've called a broadening structure, that eventually you broke out the top of. You've had a sustained period of sell-off, and that on the shorter term, if we're looking at a monthly, by the way, just to keep everyone in the frame here, that's currently a monthly, so we start on the monthly. But on the shorter term, we're actually seeing somewhat of a recovery, which, given the nature of this battle, might be the more important trend if we're looking at just a 5-day forward. So you could actually argue that a bullish position on the DAX will be better, because the flow of news has improved since that which has come out. We had a very, very calamitous spill. So I've dropped from the monthly. I usually drop by 4. So we go to weekly and then daily. So I do a top-down analysis, and you can see the patterns. That was a very bearish moment. You typically break and you revisit a key level. So a couple of concepts there. You've had a minor correction, a minor rally. You tested the low. You got temporary support. you had a weak bounce, and it came down, and then you just ran, and since then you've been in an up move.
So my question to you is based on that. Like, obviously, I love that stuff. Absolutely love that stuff. But what we're seeing is actually, and most recent move is actually a clear uptrend in play, right? And it could go all the way up to retest that previous support level, which is obviously going to become a resistance level right now. Yeah, if it was to push up a little bit further. Now, would you actually wait for a pullback? And then basically, I'm not quite sure whether you apply the price analysis, Fibonacci gain levels, and then look for healthy pullback, as they say. And then obviously, once it starts going above and breaks the previous top or previous high, would you go long? Is that how you would do it, or how would you actually? Because obviously we are time conscious of everything. So I just want you to walk us through the process for the audience and for others. How would you go about actually placing a trade and getting onto this one from your point of view?
Outside of the constraints of this battle, I would not be trading this instrument right now. And the reason is you've just had quite a good rally for a sustained period. You're coming into localized areas of resistance, not very far away. So the notion of too much very strong upside could run into quite early resistance. So the reward is, you could reverse here, but the downside could be quite a sustained pullback for a rest, even if you were to remain bullish before going higher. So this is a non-trading market for me because I trade the squeeze in the volatility whilst this is already expanded. So that's where I'm at on a serious market level. Given the nature of the game, it's much more of a casino gamble because I've already stated I wouldn't trade it. I would actually think that there's a possibility at some point we'd have some form of correction. The other key point I will make, because I don't want to overtake time, but the entering right now is rarely the right thing. So limit orders are your friend, not market orders. So a trade, just to give people an alternative, could in fact be a short as it runs into this localized high, and then trade for a short period, any correction move down like that. That's where you have a risk element that was here. You put a stop, maybe technically through the round number of 14.8 at these localized highs. You've got a few of them. You had a real resistance at the 15,000. You place a short possibly, and you just wait for the pullback because you've had a big move and now you had almost a blow off there. And it's very dangerous to chase in long when you've just had a highly extended period. There's usually some degree of rest. So if I were to trade, I would trade, and again, this is a gun to the head. It's not my trading technical. I would actually suggest a limit sell over here with a pullback somewhere around to the 13.8s, 13.9s. With the dollar getting strong again, it feels like risk off might come back into theme. You've had a big relief rally. Some of the negative news is wind down. People are relaxing again. So the short for the pain trade is where I'd be.
Fantastic. Excellent. I completely follow what you're saying. So how about we place a trade? You place a trade on that one?
I would do it very small because I don't want to damage the charity's outcome. And non-tradable symbols. So I'm not sure I will actually be able to trade this, but I would. So let me just see, how do I make that a tradable symbol? I'm not entirely sure, but I would do 0.1. If the girls want to just copy grab this, I'll visually demonstrate the trade. I would put a limit order, let it extend a tiny bit more.
Yes.
I would put a stop above the localized highs there, and I would look for a run down to somewhere here on a resumption of a little bit of concern for the markets. Let me just pull that chart as one side, make it all go away.
You can see that clearly, so that's fantastic.
Do something like that.
Excellent. Okay, fantastic. Thank you so much for that. Actually, Francis, that was very intuitive, and that was actually very helpful as well. So thank you, really appreciate that. James, let's get stuck into it.
Perfect.
So spinning the wheel and trade the asset. Oh, there you go. Local one for us.
Okay. Yeah, local one for you guys. Okay, cool. AU, let me just bring it up here. Okay, cool. Yeah, so obviously as Francis was saying, the dollar index has been pretty strong in the last couple of months. I think even since the beginning of the year. So just something that I'm looking here on AUDUSD. We are predominantly in a downtrend. As you can see, this is the 50-minute time frame. I trade off the 50-minute time frame as my bias. We are making lower highs and lower lows on the 50-minute time frame since Friday of last week already. So we tried to rally here on Friday, Thursday into Friday, and we couldn't do so. Just something that I've noticed as well with regards, because actually this is nice that I get a currency pair. I haven't traded AU in a while, but just something that I have noticed is that AU and GA and EA kind of move inversely. So if you're getting GA moving to the upside, which as we can see here, we have a clear market sentiment line here, the yellow line here on the TDI indicator above the 50 value, which means that that it indicates more bullish bias, bullish sentiment in the market for that day on the 50-minute time frame, and we're getting a move to the upside. So GA is looking strong. Inversely, AU could be coming down because we're getting a strong pound, weak Australian dollar. If you're selling AU, you're selling the Australian dollar and buying the United States dollar. So I'm really liking AU for shorts today. So not something that I would be looking to trade. I don't really trade AU. I do love trading currencies. That's predominantly the market that I trade. But just something to note here on the 50-minute time frame, I do like when that market sentiment line, the yellow line here on the TDI indicator, is in one zone the whole day. So sure. As you can see, it's moved above the 50 value over here, which means that the market could be a bit choppy today. Not maybe an ideal market, kind of like if you get on GA here and you look to the upside, you see how it's been above the 50 value the whole day. So that's showing that it's clear, strong, bullish pressure to the upside compared to AU, which is a bit of, I call it a swapping market sentiment line. It's started in the sell zone and now reached the buy zone. So it's a bit indecisive, but I do think that we could get the 800 and 200 EMAs crossing again back to the downside. So I'm going to be placing a short on.
You know, I'll have to agree with you on that one, actually. Obviously, you know, USD is actually too strong. Inflation figures are just going through the roof. Obviously, interest rate rises. Fed is actually not speaking about pivoting at this point in time. So everything is getting better against the USD right now, even though we've had a bit of a pullback over the last few weeks. So, and your strategy, obviously, as well, basically is all about intraday trading. So this trade is actually a little bit out of your trading style because it will go for a few days. But hopefully for you and for us and for charity that you're actually donating, it will be a profitable one. Definitely.
Perfect.
Excellent, gents. Just in general, you know, like how are we going with everything with time and stuff? Is there anything that anyone else would like to contribute at this point in time in terms of their trading style or anything to share with the audience for learning purposes?
So advice generally is money management for new and intermediates. So the key thing with why I illustrated the green and red item on TradingView, and many should have that, is that you highlight your trade. The concept I will just illustrate with this particular trade that is my chosen trade. I'll just put it behind the price action here, is that for me, I really get excited by disproportionate potential rewards to stops. This is actually a late entry to this market, but even still, it is lots of green and restricted red. So by keeping your stop fairly tight, you get more losers. This is something you have to determine for your trading style. You will get more losers and the game is quickly over. So I don't like long periods of pain with deep stops, but in the name of hanging on to something that is clearly indicating to you that you're probably wrong. So, and you wake up every day and you've got to look at this red number glaring at you and bleeding you out. So to be taken out quickly and to have disproportionate gains once you're on a winner, to ride the winner. And the most really successful traders are not in very long. They're losing traders. Their average hold time is very low on their losers, and their win time on their winners is long. So that's this fantastic. Usually points to disproportionate gain to risk. So the key thing is you've got to know the sizing of damage that amount of red movement will cause your account. Amazingly, this actually calculates it for you versus the potential gain. This as a risk reward is around 4.5. Had we been earlier, it would actually be more like this and even more attractive. And you would see the RRR. So I encourage people to use this and to know what they've written the check for. You never go bust taking small sized losses that you already account for that are within a percentage range of your account. The single event bad trade where you've not put in a stop is where you get hurt. And actually stops work against you in most instances. So you have to choose those moments where really tight stops are not scalping losses for you, but that you have a slugger's chance of getting away. So the best trades move normally quite quickly away from your entry so that you immediately end up with more buffer. And hence why you shouldn't use market orders. Let the market take you in. In other words, part of the confirmation of that move is happening. So that's a little bit of foundational knowledge. It's based into what we call the Hunt Volatility Funnel method on the marketsniper.com. And that's what we help people learn. Let the market take you in. It's unlikely to be the key moment right now, even though you're hyped and it doesn't feel like work not to trade.
Fantastic. Francis, that is actually brilliant. And not only that, I can see that you got the visual representation of actually your potential downside and your potential upside. And a lot of people actually don't do that. And funny you say that because, as I mentioned, I am in the broking side of things. And, I get to see a whole heap of different things these days. Generally speaking, clients or traders do quite opposite. They hang on to their losing trades and they actually take small profits on their winning trades. And what it does then is actually rationale is out of the window. They can't think properly, and then trying to compensate and make up for those losses, and that just leads into a spiral. That is fantastic, Francis. Just very quickly before I move on to James, where can potential clients or traders, where can they find you? Just very quickly to provide some insights on that.
So three W's: themarketsniper.com. Have a chat, book a call. You'll see our community. There's absolutely no pressure. We've never bullied anybody to do anything. 14-day money guaranteed comeback. And we have no salespeople. Community members of many years standing actually do the demo and the onboarding. And these are people who are now successfully trading a couple of years earlier, further down the line than you, through our website. You can also follow the YouTube. And we even do tasters where you can just purchase a trading day and just have on non-farm payrolls, which is the first Friday of every month, which often does FX things and crypto things. We get market moves out of there. You can come and participate for both a crypto session and a traditional market session. So
brilliant.
The YouTube, the website, and you'll find all those options there. Thanks for letting me.
Thank you, Francis. That's brilliant. Also, just very quickly, obviously the last touch point will be the charity and why. So, these trades that we placed actually today, we will review them in 5 days' time. Obviously, the winning money, should there be any profits, will obviously go on to the charity. What have you picked in terms of your charity of choice and why?
Yes, I went with the Nelson Mandela's Fund. Both of us are South African. We've got lots of challenges in South Africa to deal with, just returned. He was a great character of a man. Unfortunately, even inside charities, there's often mismanagement. It's one of the few that have been scandal-free. And I like the idea of both children. And I also, as a secondary, have an animal. So I've got a soft spot for the young and the animals. And Nelson Mandela will look after the fund, will look after the youth to give them a go and a chance and hopefully be good custodians of money. We all need to learn to become good custodians of money, not just charities, but every one of us, because money flows from those who value it most and look after it well to those away from those that don't and towards those that do.
Fantastic. Francis, thank you so much for that. That was absolutely brilliant. James, anything that you would like to actually share with the audience in terms of obviously learning curves and strategies and something for people to take on board?
Sure. Obviously, I'm still quite young into my trading career, 5 years compared to Francis, but we're both bored, so I look old. But just from my end, just find what works for you. you got to, I've been through multiple strategies. You got to find what works for you and then stick to it. Let the maths play out and let probabilities play out in your favor. If you're going through a period of drawdown, you just got to, let the maths play out. That's just a little data point in the actual process of your strategy. And then don't give up. A lot about trading is just staying in the market and staying in the game. And that comes with, as what Francis was saying, risk management and preserving capital. Capital preservation is key. So that would be my key take.
Fantastic. I'm hearing some really good things: risk management, capital preservation. So that's fantastic. And just on last couple of points as well, James, where can people find you?
Sure. So I am on Instagram and Twitter at JamesBruce131, and then I also have a podcast with with Austin Silva, who's been on the show quite a few times as well. So I'm on there, the Day Trading Show, and it's underneath his YouTube channel, Austin Silva FX. So that's
fantastic.
Where you can find me.
Brilliant. Hit a like or hit a follow on both of these gentlemen. They've been absolutely sensational today. Lastly, charity and why? Which one?
Perfect. So this is the charity that I've chosen. It's called Bloom. It is a special needs school here in Ballito, South Africa. So they deal with children that have autism, cerebral palsy, and they just really shed a light into the community here. That as you know, special needs children are can be quite a handful and really expensive. So this is a really great charity that helps these children live a better life and of prospects.
Fantastic. That's brilliant, mate. Thank you. Gents, we pretty much come to the end of the show. I really would like to thank both of you for, putting your time actually towards this. Hope to see you in the future. I hope actually clients have found some really, really valuable information as well, because both of you seems like you got wealth of experience basically based on trading and stuff. I know I've been in the game for quite a few years, and you can tell, newbies from the experienced traders, what you're really striving on is that risk and money management and following your rules, which is absolutely brilliant. For the audience to find out who won the battle, please keep an eye out on our social media. Hope to see you soon again next time around. We would like to thank everyone, for following us today, and in general, we thank you for everything. Enjoy the rest of your day, and we shall talk soon. Take care.